Today, we're going to be diving deep into the depths of PancakeSwap, but specifically PancakeSwap on the Solana network, which currently has a TVL of $65 million. I'm finding some of the best Solana yields to be on the PancakeSwap exchange, which is funny because PancakeSwap started out on the Binance Smart Chain, which has since accumulated over $2.3 billion and has just recently bridged over to the Solana network, and Solana has become the second largest network on their DEX at $65 million in total TVL, specifically for Solana. That's higher than Base at $43 million, higher than Ethereum at $37 million, and higher than Arbitrum at $31 million, and some of these other smaller networks as well. Now, if you don't already know, PancakeSwap on EVM networks like BNB, Base, Ethereum, stuff like that, is a Uniswap v3 fork, which means that it's using the security and the infrastructure of Uniswap v3. They don't have to go out and spend millions of dollars on audits because those contracts have already been audited. They're just being adapted to PancakeSwap's brand and the networks that PancakeSwap is on. Now, when it comes down to PancakeSwap's Solana integration, that is a fork of Radium, which has also been audited several times, and Radium currently has a $2.8 billion TVL. Now, PancakeSwap aims to capture the recent uptrend in overall TVL on the Solana network, which currently sits at $31.2 billion. If we look at recent months, you could see ever since April, we went from about $13 billion all the way up to $31 billion. Completely basically flipped those numbers right there, just over the time span of about 5 months or so. And Solana is capturing on this TVL uptrend, bringing that revenue into the ecosystem and sharing it with their cake holders. So taking a look over here on PancakeSwap, I want to talk about liquidity provision because that's what this channel is all about. We're going to be looking specifically at the liquidity section. Now, there are some cake incentives being given out to specific liquidity pools like SOL to USDC. Same thing with CBBTC to USDC, SOL to USDT, USDC to GGUSD, and many other liquidity pools. Point is, incentives are being given out right now to incentivize liquidity provision over on PancakeSwap, which opens up a huge opportunity to anybody that wants to provide liquidity over on PancakeSwap. But here's the thing, when we start to dive into some of these pools, let's just say we did SOL to USDC, we don't have much data on what that APR actually is over a longer horizon and what effect liquidity distribution has on it and stuff like that. So if we wanted to add our deposit amount, find our range, let's just say we did -10 plus 10, we did 1 SOL and about 281 USDC, it's showcasing that we're getting roughly an 80% APR, which is already a pretty good return for this range. But that's using the past 24 hours, 7 days, or 30 days of data, and we don't have many analytics. So instead, we can use tools like Metrix Finance to find these liquidity pools. I want to go ahead and show you real quick. If we select the PancakeSwap exchange on the Solana network over on the Discover sector of Metrix Finance, I can segment to only use the past 14 days of data when it's calculating this potential APR. So what that's doing is that's averaging out the daily volume over the past 14 days and the daily fees. It's finding the potential deposit amount that you plan on deploying to this pool, and it's simulating a potential APR based on those numbers. So taking a look over at SOL to USDC, for example, let's go ahead and pull this up and hit simulate. This is going to allow us to dive deep into the actual metrics behind this pool, hence why we named it Metrix. And now what I want to do here is start to formulate my liquidity provision strategy, meaning that I'm going to start with my deposit amount. How much do I actually want to deploy into the pool? Because believe it or not, this matters a lot more than you actually think. Because for example, there's currently $2.5 million of liquidity in this pool. $1,000 are instant simulations showing 408% APR. And again, we're going to refine this to ensure that we can get the most accurate results possible and get as close to this APR as possible. But first, let's start by looking at deposit amount. $1,000 returns 408%. Let's just say we were to do $10,000. That returns 402%. Let's just say we were to do $100,000. Now we're at 348%. The reason being is because we are diluting the overall pool's TVL. We are depositing a large amount of capital compared to the $2.5 million in TVL that PancakeSwap has. So we always start with our deposit amount because that will give us an instant reading of if we should even deploy into this pool in the first place. Now, our general rule of thumb is to not make up for more than 5% of the overall pool's TVL. Let's move forward. Let's talk about what we should do next. So assuming I want to deploy $10,000 in this pool, which is kind of around what I typically deploy into these types of pools, I want to start to adjust my price range. So my price range is where I'm providing liquidity. The tighter the range, the higher the yield I'm going to earn. As you can see, if we were to bring that kind of max price closer and that min price closer, we're now doing a significantly higher APR. But beware, there is something called divergence loss. Some people also refer to it as impermanent loss. That right there can essentially eat away all our fees and just simply make it a better idea to hold Solana in our wallet. So we need to refine our strategy. I'm going to set my min price to the bottom of this 30-day chart, and I'm going to set my max price to the top of this 30-day chart. And as you can see right there, we're basically going to go out of range instantly. This is not that good of a range, but it's a starting point. And when we look at the trend, we can see that Solana has seen an uptrend over the past 30 days. So we need to adjust accordingly. If it's going to continue to go up, then obviously it's instantly going to get kicked out of range. So let's move that max price up a decent bit. I want to pay attention to how much Solana can move in a day, going from 233 all the way up to 246. That right there is a 5.58% percentage change. So going back over to Metrix Finance, we want to make sure our max price is at least 6% to make sure that we can encapsulate that. But in all honesty, we're going to need more because the trend is bullish and we don't want to just go out within the time span of a day. So I'm going to double that. I'm going to put it at roughly plus 12%, which is a price of 278. I would need to determine how quick I think Solana can get to a price of 278. I think it's possible to get there over the course of roughly 5 days or so, because as we go up, we're going to see a little bit of a minor retracement, go up a bit more, see another minor retracement, and then kind of hit that period, which is going to take a couple days at the very least. And then from there, I want to adjust my liquidity pool strategy to kind of better fit what my goals are. And I want to start with more SOL in this liquidity pool. And right now, only 26% of my $10,000 is in SOL, meaning that I need to adjust my range in order to get more SOL. So I can do that by bringing up my min price or bringing up my max price, basically. And it could be a conjunction of the two, but I want to just start by bringing up my min price. If I kind of look at recent data, this is a support level on September 6th, roughly at a price of $200. So I could start by setting at $200, but even then, that still only gets me 35% SOL. So we can move this up even a little bit more, and 220 is kind of where I would be comfortable putting my min price, because we're currently sitting at a price of 248, and of course going down to 220 would mean that we see 11.5% decline, which is very much possible. Now this range right here kind of gets me towards the 50-50 mark. We have 48% SOL, 52% USDC, but in my opinion that's still not enough. I'm bullish on SOL right now. I think it's going to continue to do very, very well. So what I need to do is adjust my max price up higher until we have my desired amount of SOL. Now, typically, if I'm bullish on an asset, I want to start with 60 to 65% of it. That is, of course, if I think that it's going to start to go up in a trend without seeing any declines in the short term. If I think there's going to be declines in the short term, I might drag this max price a little bit back down, maybe to negative 14%, just to get back down to like 62% SOL and make sure that we can actually capture that decline. So I'd say this is a pretty solid price range. Minus 14%, plus 29%. That gets us about 62% SOL, 38% USDC. Everything looks good, right? We're getting a 70% APR. Let's go ahead and throw all of our money at it. No, absolutely not. We need to ensure that the calculation that we're spitting out over here is accurate. We also need to determine different potential APR options and what that might look like after we deploy into the pool, because the APR is changing on literally a per trade basis. So every single trade that comes through on this liquidity pool, which keep in mind it has $35 million in volume over the past 24 hours, that is affecting the overall APR. So we almost want to create a range of our low APR, our high APR, and kind of what we're expecting within this pool. So the first thing that we will do is look at this volume history. You can see we're averaging out to $21.5 million per day. Looking at recent data, ever since September 7th, we've been above $20 million per day. So I'd say this is a solid average, but there are going to be case scenarios where we need to adjust to only factor in recent data, because perhaps this data all the way over here is irrelevant because it's significantly higher or significantly lower. Now, just for precautionary measures, I'm going to use since August 29th. So I'm going to be using a 20-day calculation time frame over here, and that will date me back all the way to August 29th. That lowered my average from $21.5 million roughly to about $20.5 million or so. Something that's a little bit more realistic, I would say. But in the recent days, there have been some spikes where we get 34, 35 million, which are going to be above what we actually get in this pool. Now, looking at that, that still shows 1383% APR. I have my calculation method selected as average liquidity in range. What that's essentially doing is that's summing up all the liquidity on this chart, which over here you can see there is $679 of USDC liquidity here. Over here, there is roughly $9, right? And there's these periods where there's tons of shifts in liquidity basically, right? And there's tons of jumps and declines just because of liquidity providers that are looking to get incentives on this pool. And even over here, there's $846 of liquidity. We're getting a 68% APR. Over here, where there's 810, we're getting a 71% APR. Where there is 885, we get 65%. Where there's 995, we get 57%. So what I basically want to do is look at those periods and see what type of returns we're getting on those jumps. So again, looking at this area, we're getting 57%. Looking at this area, we're getting 68%. And just knowing that these positions are going to end up bouncing around. Some points in time, they're going to be getting significantly higher APRs. Other points in time, they're going to get very, very low APRs. And that's just how liquidity pools work. So as a general rule of thumb, I like to find an area on this liquidity distribution that is kind of between the highest and the lowest, which over here you could see that the highest is $885 where we're getting that 65% yield. And that's just one of the recent highs, like we have all the way over here at $995. And then the lowest is obviously going to be around like $1 or $2. So kind of the middle ground is this area where we have $540 of liquidity and we're doing a 106% APR. I would say that's kind of like what I'm expecting, assuming I dive into this liquidity pool. Now, with that being said, that's significantly higher than any other exchange out there right now, simply because a lot of these other exchanges have huge amounts of liquidity on current prices and super tight range liquidity on current prices. Whereas PancakeSwap is a little bit all over the place because it's waiting for liquidity providers like us that have long-term strategies that want to generate income to come and put up that liquidity. So I'm expecting about 106% in this instance, right? I know that there's going to be times where I earn lower than that at probably about 50%. And I know there's going to be times where I earn higher than that at maybe 500 to 600% and well above that basically. But it's going to average out as liquidity providers come in basically. So what I can do is I can head down over here to the deposit amount section, hit create position. It's going to take me over to the pool on PancakeSwap, and then I can fill in my range, which is 213 to 320. Then all I have to do is type in the assets that I want in this liquidity pool, which would be 25.02 SOL. It's going to pre-fill the same amount of USDC basically. That's a little over $10,000. I can connect my wallet and deploy my capital in this pool. Now here's the thing, because PancakeSwap is incentivizing this pool, we're most likely going to get roughly a 20% boost in overall rewards. And that's because cake rewards are roughly 20% of the overall APR that we're getting on this pool. So again, we're going to get a higher APR than what Metrix shows because Metrix has not yet supported the cake rewards for the Solana network quite yet. Now, after you deploy into your PancakeSwap Solana liquidity pools, you can track their performance directly through Metrix Finance. All you have to do is paste your wallet address. You don't even have to connect it. So by pasting in your wallet address, you'll see an aggregated view of all your positions. This is just a random wallet address that we pulled up from on-chain. It has some Orca positions, it has some PancakeSwap positions, and ultimately, we want to view some performance data on this. So I'm going to isolate this to specifically the PancakeSwap exchange and on the Solana network. Now this is showing us positions that they recently opened as of the last couple of days. On these positions, they have $6,000 in deposits, in which that's appreciated to roughly $6,100. They're generating a 163% APR, where they're earning about $85 in total so far. After divergence loss, they're keeping about $68, right? So that means that they're retaining about 80% of their overall earnings after divergence loss. Now, when we look at the overall profit spread right here, it's about $78 just from prices going up. They also have $85 in earnings, which means their overall profit is $164, which is a 2.73% return on investment from their initial deposit. All of that is shown automatically just by pasting in your wallet address. Now let's look specifically over here at their sold to USDC pool. You can see all the key metrics for this pool, like this one currently doing a 175% APR. We can view what they started with in terms of SOL as well as USDC and what they currently have and their overall percentages. So they started with 50-50 and they're now left with 10% SOL and about 90% USDC. You can see the breakdown of their earnings, what they've claimed and what they haven't claimed quite yet, as as well as their divergence loss across all 4 different metrics. If they held in their initial ratio, which was 50-50, if they held in a 50-50 split, if they just stuck it all into USDC, and if they just stuck it all in SOL. You can see the difference between what they have in the liquidity pool and what they would have had if they held right here. And then you can view the difference after you add in the earnings, which they're beating all 4 metrics right here. So that makes this a very solid liquidity pool. We could see the overall trend of the price here and how that stayed in range or potentially gone out of range at specific periods, and how much SOL was converted to USDC and what price it was converted at on average. In this instance, they've been in range for 97.8% of the time because they dropped out of range right over here. Now, on top of that, if we want to rebalance at a specific price, we could set an alert to send us an email whenever it goes below a specific price. So I might set an alert for this one of below 245 pool price, which would put me back at 33.5% SOL, which would ultimately give me lower divergence loss when I execute on that rebalance. Now, on top of that, we could see their position liquidity over time, as well as all those HODL metrics, all the projections based on the overall pool APR, the actual APR based on what they've collected so far in earnings. And we can even add hedges here if we want to hedge out the SOL exposure within this liquidity pool, whether the hedges are from Hyperliquid or even PancakeSwap perps directly. We can add those in here manually by just simply adding in a short. And then last but not least, we have the entire history for this position, which was just a deposit 3 days ago. And if we need to, we can manually override this data in case we had some slippage when swapping into SOL. Maybe this was worth $1,041 at the time of entry, but we paid $1,050 for it because of slippage and trading fees. We can customize that and override that data. So all of this is done through Metrix Finance, but more importantly, if you're LPing on Radium or Orca, I would highly recommend you also take a look at PancakeSwap now on the Solana network, because there are some pretty good returns over there. I hope you enjoyed today's video. If you did, drop a like, subscribe, notifications turned on, and I'll see you guys in the next one. Peace out.